Why do 70% of new investors chase the next big thing? Is it the thrill of the unknown, the hope of striking it rich overnight, or maybe just the fear of missing out when everyone else seems to be cashing in? The world of investing is full of stories, some of wild success, others of painful losses. But what drives so many people, especially those just starting out, to jump on the latest trend? Maybe it's the constant barrage of headlines promising the next Apple or Amazon, or the viral social media posts showing off massive gains. Whatever the reason, the reality is that most new investors are drawn to the excitement of what could be, rather than the steady grind of what usually is. And that's why today we're diving deep into three names that have been making waves: NXTT, WHLR, and Forta. Are they truly the next big thing or just another flash in the pan? Let's break it down. Are NXTT, WHLR, and Forta actually worth your cash? That's the million-dollar question, isn't it? With so many options out there and so much noise in the market, it's easy to get overwhelmed. But before you put your hard-earned money on the line, it's crucial to look past the hype and dig into the fundamentals. What do these companies actually do? What makes them different from the competition? And most importantly, what are the risks and rewards of investing in each one? We'll look at their business models, their growth potential, and the challenges they face. Because at the end of the day, investing isn't just about chasing the next big thing. It's about making smart, informed decisions that fit your goals and your risk tolerance. Let's cut through the hype and see what's real. Forget the buzzwords and the flashy marketing. We're here to get to the heart of what matters: real data, real performance, and real potential. Because when it comes to your money, you deserve more than just empty promises. You deserve the truth. So, let's take a closer look at each of these companies, starting with NXTT. First up, NXTT, or Next Technology. It's all about innovation and future-focused tech. This is a company that's betting big on the next wave of technological change. From artificial intelligence to the Internet of Things, NXTT is positioning itself at the forefront of the digital revolution. But what does that actually mean for investors? Well, for starters, it means you're buying into a vision of the future. A world where smart devices are everywhere, data is king, and automation is the norm. NXTT's team is made up of engineers, data scientists, and entrepreneurs who are constantly pushing the boundaries of what's possible. They're not just following trends, they're trying to set them. And that's exciting, but it's also risky, because in the world of tech, today's breakthrough can quickly become tomorrow's old news. Think AI, IoT, and all those buzzwords you see in headlines. NXTT is working on projects that sound like science fiction: smart homes that anticipate your needs, AI-powered assistants that learn from your habits, and networks of connected devices that make life easier and more efficient. The company's research and development budget is massive, and they're constantly rolling out new prototypes and pilot programs. But here's the thing: for every tech company that changes the world, there are dozens that fade into obscurity. The competition is fierce, and the pace of change is relentless. So, while NXTT's vision is compelling, it's important to ask, can they actually deliver? Do they have the resources, the talent, and the strategy to turn their ideas into reality? And if they do, what does that mean for investors like you? But remember, new tech means new risks. The technology sector is notorious for its boom and bust cycles. One minute, a company is the darling of Wall Street. The next, it's struggling to stay afloat. NXTT faces all the classic challenges: rapid technological change, shifting consumer preferences, and the constant threat of disruption from upstarts and established giants alike. There's also the risk that their products won't catch on, or that they'll burn through cash before they can turn a profit. And let's not forget about regulatory hurdles. Governments around the world are starting to pay closer attention to data privacy, cybersecurity, and the ethical implications of AI. Any misstep could be costly. So if you're thinking about investing in NXTT, make sure you're comfortable with the risks. This is not a stock for the faint of heart. The upside? If they hit it big, your investment could blast off. We're talking about the kind of exponential growth that can turn a small stake into a life-changing sum. Just look at the history of tech investing. Companies like Apple, Google, and Tesla all started as risky bets. The investors who got in early and held on through the ups and downs were rewarded handsomely. NXTT has the potential to be one of those stories. Their technology could revolutionize entire industries, from healthcare to transportation to entertainment. If they execute on their vision, the sky's the limit. But remember, for every success story, there are countless failures. So, while the potential rewards are huge, so are the risks. The downside? High volatility and lots of competition. The tech sector is a battlefield with new startups popping up every day and established players fighting to maintain their edge. NXTT is up against some of the biggest names in the business, and the competition is only getting tougher. Stock prices can swing wildly on rumors, news headlines, or even a single tweet. If you're not prepared for the roller coaster, you could end up selling at the worst possible time. And let's not forget about the psychological toll. Watching your investment soar one day and plummet the next can be stressful, to say the least. So, before you jump in, ask yourself, do you have the stomach for this kind of ride? Now let's shift gears and talk about something a little more grounded: real estate. Next is Wheeler Real Estate, ticker WHLR. WHLR is a company that operates as a real estate investment trust, or REIT. For those who aren't familiar, a REIT is a company that owns, operates, or finances income-producing real estate. It's a way for everyday investors to get exposure to the real estate market without having to buy, manage, or maintain properties themselves. With WHLR, you're essentially buying a piece of a portfolio of commercial properties, shopping centers, office buildings, and more. The idea is that these properties generate rental income, which is then distributed to shareholders in the form of dividends. It's a model that's been around for decades, and it can be a great way to diversify your portfolio and generate steady income. This one's a REIT, so you're basically investing in property without ever fixing a leaky faucet. No late-night calls about broken water heaters, no dealing with tenants, no worrying about property taxes or insurance. WHLR takes care of all the day-to-day management, and you get to sit back and collect your share of the profits. It's a hands-off way to invest in real estate, and for many people that's a big selling point. But like any investment, it's not without its risks. WHLR focuses on retail spaces, but let's be real, the retail sector isn't exactly thriving right now. The rise of e-commerce has put a lot of pressure on traditional brick-and-mortar stores, and many shopping centers are struggling to attract tenants. Empty storefronts and declining foot traffic are becoming all too common. WHLR has had to adapt by rethinking its tenant mix, investing in property upgrades, and exploring new ways to drive traffic to its centers. But the challenges are real, and the future of retail is uncertain. If you're considering an investment in WHLR, it's important to understand the risks. Will they be able to fill their properties and maintain rental income? Or will they be forced to lower rents and accept higher vacancies? These are the questions you need to ask. They pay dividends, which is nice, but watch those earnings reports, they tell the real story. Dividends can be attractive, especially in a low interest rate environment, but they're only sustainable if the company is generating enough income to cover them. If rental income drops or expenses rise, those dividends could be at risk. That's why it's so important to keep an eye on WHLR's financial statements. Look at their occupancy rates, their debt levels, and their cash flow. Are they growing or are they treading water? Are they investing in their properties or just trying to stay afloat? The answers to these questions will tell you a lot about the company's long-term prospects. Last up, Forta, the crypto. Now this is a whole different ballgame. Forta is a blockchain-based platform that focuses on security for decentralized networks. In a world where digital assets are becoming more valuable and more vulnerable, Forta aims to provide the tools and infrastructure needed to keep those assets safe. Their technology is designed to detect threats, monitor transactions, and respond to attacks in real time. It's a critical piece of the puzzle for anyone who believes in the future of crypto. Forta's big on blockchain security, helping protect crypto networks. Potential? Absolutely. The rise of decentralized finance, NFTs, and digital currencies has created a massive need for robust security solutions. Hackers are constantly looking for vulnerabilities, and the stakes are high. Billions of dollars are at risk. Forta's platform is designed to provide real-time monitoring and threat detection, giving users peace of mind and helping to build trust in the crypto ecosystem. If they can establish themselves as a leader in this space, the upside could be huge. But as with any emerging technology, there are plenty of challenges to overcome. But remember, crypto swings harder than mood swings on Monday morning. The crypto market is notoriously volatile, with prices that can double or halve in a matter of days. Regulatory uncertainty, technological glitches, and shifting investor sentiment can all send prices soaring or crashing. Forta's success will depend not just on their technology, but on the broader adoption of crypto and the willingness of users to pay for security. If the market takes a downturn, or if a competitor comes up with a better solution, Forta could struggle. So, if you're thinking about investing in Forta, make sure you're prepared for a wild ride. So, are these a buy? That's the question everyone wants answered, but the truth is, there's no one-size-fits-all answer. Each of these investments comes with its own set of risks and rewards, and what's right for one person might not be right for another. The key is to do your homework, understand what you're buying, and make sure it fits with your overall investment strategy. Don't just chase the latest trend because it's hot, make sure it makes sense for you. Only if you've done your homework and can stomach the roller coaster. Investing isn't about luck, it's about preparation, discipline, and patience. Take the time to research each company, read their financial statements, and understand the risks. Talk to other investors, seek out expert opinions, and don't be afraid to ask tough questions. And most importantly, be honest with yourself about your risk tolerance. If you can't sleep at night because you're worried about your investments, it might be time to rethink your strategy. Play smart, invest wisely, and don't put all your eggs in one basket. Diversification is your best friend. By spreading your investments across different sectors, asset classes, and geographies, you can reduce your risk and increase your chances of long-term success. Remember, investing is a marathon, not a sprint. The goal isn't to get rich quick, it's to build wealth over time, one smart decision at a time. So, whether you're considering NXTT, WHLR, Forta, or something else entirely, make sure you're investing for the right reasons. Stay curious, stay disciplined, and never stop learning. Your future self will thank you.